Yeah, good night, folks. We are Tuesday, 18th of March, after the closing. So, very important video. I come back with a name you know already. It's LITM, Snow Lake Resource. Okay. Very, very important news today, and very important technical indicator that I need to share with you. You need to be very focused, please. The PR that was released today is very unique, in my humble opinion. I tell you why. Let me refresh your memory, or basically explain for the one who don't know. End of January, or mid, I don't remember, LITM sold during a run where we were around $1.7 per share. They decided to sell 20 million shares at $1. That was the third offering in 1 month. So naturally, the float have been arriving at around roughly 88 to 92 million share float. But they have like $35 million in hand. With that, they have concluded some kind of agreement with an Australian uranium company to make a kind of association to bring to life a uranium mine in Wyoming, USA. Okay, so that's history. After this offering, the stock slide from $1 to 39 cents. Huge. Today, what they say, let me summarize, explain. It's a little bit tricky and confusing if you don't read between the lines. And I think I understand what they are planning to do, and it's very smart move. Basically, they say we have the goal to buy back 5 million shares. That's around 5% of the float. And we are going to allocate for that $10 million. Problem, at today's price, $10 million give you the right to buy 20 million shares, not 5. Okay? It's important to notice that. So if they say we are going to allocate $10 million to buy back 5 million shares, that means that they plan to buy, first day, it's Monday, 24 of March. They plan to buy all the way until $2. Because at $2, if you want to allocate $10 million, that means 5 million shares. So, in my humble opinion, they are planning to buy from the price of Monday until $2. Why I say it's smart? 2 reasons. First, they give a very short period of time to do this buyback. 1 month. From the 24th March to the 24th of April. Normally a buyback, they say, during the next 6 months, during the next 12 months. So you don't really know when they are going to buy, and they will buy only the weekdays when the price dip. Here, if you have only 20 trading sessions to buy 5 million shares, that means you need to buy every day, if you buy every day, 250,000 shares. 250,000 shares. That's roughly $100,000 plus per day. The fact they are going to delete 5% of the float, it's not especially huge. What is huge is the time frame, 20 trading days, and the connection with the news of the result of the second phase of the drilling in Namibia. Try to follow me to understand what they can do to make a killing in the market. Imagine they go in a blackout period from the 24th of March to the 24th of April, okay? And they buy every day or from time to time 5 million shares. They will not be alone. A lot of retail are looking at this news, institution, whatever, and they will do the same. Basically buy and just don't move. Let's imagine the price go to $2 by the end of April. That will mean a market cap of $180 million. Minus the shares that have been retiring from the market, so it will more be around $170 million market cap at $2 per share. But imagine the perfect scenario. They don't release any PR during the 20 trading days. They buy shares. The price of the stock go up every day. 60 cents, 70 cents, 80 cents, $1, $1.20. Then, end of April, they say, like we were saying, we have been buying 5 million shares of an average price of $1.25, example. And we are going to release tomorrow the result of the 7,000 meter second phase drilling in Namibia. Let's try to be a little bit smart here, folks. If these guys are buying back for $10 million shares, they already know the result of the drilling. But they know they need to have the validation from the scientific analysis of, data to release officially the news maybe end of April. So look at the 1-2 punch. They buy shares during 20 trading days. They bring the price back to $2, no more risk of the delisting. And then they release huge drilling results from Namibia and some other stuff, what's going on in Wyoming with the lithium mines, I don't know. And from there, you have a big spike in price who bring us to $3, $4, $5 per share. And from there, they do a new offering. I don't know, 30 million shares at $4. That's mean $120 million. They can do that because how they're going to justify? They're going to say, yeah, we vote for a buyback because our stock price was, at the end of the channel, we were a sub 50 cents with the risk of delisting. So yeah, we have invested $10 million in our own company. Now that the price is more realistic with what we have under the ground, and the stock price is at $4, we sell these shares again, and we take the cash to build the mines or pay for new drilling somewhere else, Wyoming, or I don't know. And I think that's the scenario they have in their mind. One, avoiding delisting. So they absolutely need to bring the price above $1 as soon as possible. They are going to start buying Monday. So we have Wednesday, Thursday, Friday to accumulate. Until Friday night, you're going to see the short do what they have done today. Manipulate the price to contain the price as low as possible. So, for example, today it was 60% of the total volume was short. So, if they do that until Friday night, you can have the price will be sitting around 50 cents, 60 cents, whatever. And from there, they can cover Monday morning or Friday night to avoid being with the company buying back shares at the same time they need to short. So I think the 3 next days will be very interesting. And you need to basically buy the dip, because there's going to be some dip, because the short are going to try as much as they can to control the price before the buyback. So there is like 3 trading days coming, and we have some technical indicator who are pretty interesting. Today the stock close, I insist on close, above the 100 and the 200 moving average, they were around 0.52. The 50 moving average is at 68 cents. So that's the target to pass, to have a huge run. Keep your eyes on the 50 moving average. But the fact that for the first time since December, we close above the 100 and the 200 moving average, it's a huge sign of reverse of tendency. And you even have some kind of golden cross with the 100 crossing the 200. So it's a huge reverse. Now the point is 68 cents. That will be a huge resistance, and shorts are going to play with that to, trying to contain the price. And when Monday is going to arrive, let's see at what price we're going to begin, because last time we have some technical indicator of that nature. It was around 17, 18 of December. The price was a lot lower. We were at sub 20 cents. Now we are starting from 50 cents. So what I see happening here is that once we pass the 50 moving average at 68, you're going to have a run who quickly bring us to $1. And from there, if I was the company, I will try as much as I can right there to avoid paying 110, 120, 130 for 140. So I think the start of the run, beginning of Monday, will be very huge, very important, because it's in their own interest to pay as low as they can. But you're going to have volume, you're going to have retail, you're going to have technical indicator who are going to be great. Look, for example, at the bottom of this chart, the VTX. VTX is an indicator that I like personally, because naturally you need to see the other indicator. But when you see the green line crossing the red one, as that happened today, that's mean a change of tendency. So here you have, the fact we close above the 1 and 200 moving average, plus the VTX crossing, plus the unbalanced volume is sky high, meaning that each time there is volume, it's on the buy side. You have all the ingredient for a big reverse. I think technical indicator traders, they are going to come with volume once we pass the 50 moving average. So basically you have until 68 cents to accumulate, and basically now it's a great price. Tomorrow it's possible that we may be testing the 100 and the 100 and 200 moving average at 52 cents, and from there seeing the short cover some, because they have been shorting a lot today. So it's an interesting story, because I don't really remember a company saying we're going to do a buyback from that date to that date. It's very precise. They give a lot of precise number, 24 March until 24 of April, $10 million, 5 million shares. And they say, if you read the PR in detail, if we have the legal authorization, we may buy more. But we have all the right to change, modify, this and that. Why they say that? Because if they see, let's try to be, aware. If they see that even with this news, the short trying to push the price down by shorting even more, they may say, okay, we're going to buy more shares to force them to cover. And try to imagine the triple punch. They buy back shares, and even more than what they say. They have the right to do it if they file the paper. The short cover, and they give huge news from drilling in Namibia. If these three things come together, you have a kind of atomic bomb, Today it's a huge volume, and 60% of this volume is short activity. So that's mean that even if the price run 30%, it was with the short pushing the brake at the max. Because it's pretty rare the short, short more than 60% on a high volume day. Sometimes they short 70% on a low volume day because they can manipulate and there is few buyers. But today it was a lot of buyers, a lot of volume. And even if we run 30%, they have been able to short 60% of today's volume. Plus the dark pool, the fail to deliver, blah, blah, blah. Honestly, I think the company have no other choice to avoid the listing, to push the price. They are trying to avoid a reverse split. That's why they do that. And I think they write in the PR, we can buy even more if we have the legal authorization. That's mean that if they see that the price, because remember, they sold shares at roughly 40 cents, 80 cents, and $1 during the three last offering. That's mean that everything they can buy under 80 cents, it's a good buy for them because they are paying less than what they have received. So basically, they are pushing cash to have more shares that they have been, that they have diluted to raise cash. So I think that until 80 cents, they're going to be very aggressive on the buyback, very aggressive. But nobody knows how the short are going to react. They are going to cover, understanding that this is no joke, or they are going to manipulate to avoid covering. If they do that, the company who want to avoid the listing and want to avoid the reverse split, they may buy even more. And the retail is going to see that. They're going to see the volume, see the spike, and they are going to join the feast. So it's a very tricky situation because there is 20 trading days starting Monday to do all that. And basically, it's a kind of bet that they are doing. They say, okay, all the money we have received, we have raised cash, 35 million. I don't know what remained from of that. We're going to push it back in the market to buy shares at a lower price we sold them. And by doing that, we have a double advantage, avoiding the listing, plus bring the price a lot higher before the Namibian news, who can make the price to explode. Remember what I told you in an old video on LITM 1 month ago, I think? I tell you, if the mine in Namibia is for real, and remember, you need to join that now, the Wyoming uranium, where they have 50% participation, another uranium mine in Canada, and the 2 lithium mine. But whatever. Namibia alone, if the drilling is good mean they need to have some, have 250 to 350, uranium per ton. So I don't remember the names, whatever. If the number are great, we are talking about Namibia alone of a mine of a value of $1 billion. That's the average in Namibia for the valuation of a uranium mine, plus all the rest that they have. So it's a kind of, it's very, I don't know. I'm convinced they say we can buy even more shares than 5 million if we see, if they see that the price is contained under $1. And now start Monday, everything they can buy under 80 cents and $1 is a lot less than what they sold them. So it's a good investment, again, if they know that the news of Namibia is great. All these shares they are going to buy back, they can sell them back to the market at $2, $3, $4, $5 per share. And they make the difference. Make the figure. $5 million. 5 million shares, let's say at an average price of $1.5 per share, example. That's mean $7.5 million, okay? This 5 million shares, if they sold them at $5, that give them back 25 million for 7 million they invest. So it's a good move. So, let's see. Today it was huge because, don't remember, the day was bloody. Lot of red today. So it was not a good trading days. So LITM go at the reverse of the market. And they have done that with huge volume and with the short pushing the break at the max, 60%. So if you combine all that, I don't know if I was a short, honestly, if I was short on LITM, what I will do here, I will try at the maximum to play games until Friday afternoon, containing the price, pushing the price down, then let it go, then redown, and trying to keep the price under the 50 moving average, 68 cents. And Friday night, when every trader go in holiday and long weekend, I will try to buy a huge green candle of shares and push the price, above the 50 moving average, let's say 75 cents. If that happen, that's mean that Snow Lake will need to pay the same price they sold. That's mean 80 cents and $1. I think the short will make no gift. They say, okay, you want to buy back shares, you're going to buy them at the same price you sold them. So you're going to pay from 80 cents to $1. That's what I see. And I may be wrong, naturally. I have been wrong so many times. So the story is very, very interesting because it's 20 trading days. We are under $1. We have huge amount of uranium on Canada and Namibia. And we have this buyback with concentrate in 20 trading days. Plus the short, what they're going to do. Today, with the volume, the short have been, basically selling like 3, 4, 5 million shares short. They're going to need to cover all this. And I think they're going to cover before we go above the 50 moving average and before Monday. Because if they need to chase with the company buying back shares plus the retail who will be following, it will be difficult, very difficult. Especially with the retail knowing that the company is buying back shares. So they don't want to sell because they know that the news of the drilling is coming, the company is buying back shares, and who knows what else. So honestly, look at the chart. We close above the 100 and 200 moving average. We're going to attack very shortly the 50 moving average. The VTX just crossed the red line. Super sign, especially with volume like today. The algo, if you're going on the website americanbulls.com and you write LITM, you will see that the algo was already buying at 38 cents, and they are making a killing on LITM because they have transformed in the last 24 months. They have transformed $100 in $20,000. So this stock is perfectly responding to the algo, and algo is buying since 38 cents. And tonight they say, stay long. All the light are green. We are above stop loss and all that. So it's huge. It's very huge. I have naturally a position, disclaimer, that I'm ready to double if I see that we passed over 60 cents. I want to see the price above 60 cents clearly. And I may be buying tomorrow if we test the area of 51, 52 cents. So, or I will buying on dip at 51, or I will be buying during the run-up above 60 cents. And then the big test is the 50 moving average, 68 cents. If we cross that, see you above $1. Take care.